USDA on Wednesday added 218 counties to the list of natural disaster areas. The total, as of this taping, now stands at 1,584 counties. That's over half of the counties in the country. Crop conditions across the U.S. slipped again this week, adding a now familiar turbulence to grain markets. Reuters says corn has seen its biggest two-month rally since 1988. On Wednesday, we talked with Darin Newsom about decreasing yields, ethanol production, and the volatility seen last month.
I think the key word for July was probably catastrophic when we start talking about the markets, particularly the crops, corn and soybeans. You know, the type of weather that we saw, the unrelenting hot and dry across the Midwest, not only did it light a fire in the fields, you know, it put the markets in a place where they were scrambling, and we saw new highs posted in both corn and soybeans. Wheat tried to follow, and the questions in everybody's mind is, what's it ultimately going to do to production? How tight our supply is going to be when we do finally finish harvest?
Do you still think there's room to lower yield?
I think so. Yield seems to be coming down almost daily. With every day that the weather forecasts don't change or the weather conditions don't change, we see yield estimates coming down. Right now, corn yields are anywhere from 130 to 140, but 130 to 135, but a lot of them are starting to come in below 120 bushels per acre. So starting to be a real problem, and ultimately it's something that the market's going to have to deal with when it comes to the demand side of the equation.
We talked in March about demand and whether or not the demand market for corn would be ending. Now, we didn't know at the time that we were going to see this extended drought. So we know there's going to be rationing demand for both corn and beans. What demand or what guarantee is there that the demand comes back eventually?
Well, that's going to be a big issue, more so in corn than in soybeans, because what we're faced with is three key categories of demand. That's feed, exports, and ethanol. All three of them are going to have to be drastically reduced in 2012-13, so starting in September 2012, running through August 2013, if we're going to maintain any type of ending stocks at all domestically. Now, what's interesting is that soybeans are a more inelastic demand. It's going to be harder to trim demand in soybeans because of the Chinese usage of beans. So that's going to be a different set of issues. How long could it be to bring demand back? We could be looking at a multi-year problem here because there's no guarantee that we're going to start rebuilding corn stocks with the 2013 crop. It's going to be difficult, and so we're going to see demand stay sluggish or possibly down for 1, maybe 2 more years.
Let's break into corn and beans, and let's start in corn. You mentioned ethanol. With ethanol, this is a touchy subject, I guess.
It is.
How does it affect? What's its place right now? Does the government move on it at all? Does it lower mandates?
I think we're going to hit a point. If we do indeed see national average yield come in below 120 bushels per acre for the corn crop, we're going to have to see some sort of movement. I mean, the ethanol industry has been huge for the Midwest. There's no doubt about it. There's no denying that. But if we do see an emergency situation and supplies dropping as far as what they possibly could, we'll have to see some sort of movement, because it all can't come on the backs of reduced feed due to reduction of herd size and lower export just due to a lack of supply. So ethanol will see its share of reductions. Will it be mandated? Will it be market driven? Could be a little bit of both.
In soybeans with China, at what point does China say, you know, this isn't much fun buying this much and this big? Where do they shift, or do they shift? You
know, they've already done a great deal of buying for 2012, 2013, but their demand is such that they really can't just all of a sudden shut it off. They need it for feed. They need it for their, for their population continues to get larger. Their middle income folks continue to get larger, and so they have a very solid demand that they have to continue to meet. So it's going to be difficult, because not only are we having a problem here, but we're coming on the heels of a South American crop that was also lower in production due to its own drought problem. So it's two huge suppliers, the U.S. and South America, both are looking at short supplies. That's going to leave soybeans in a very difficult situation, basically once we get into, say, mid to late winter.
Have grain markets blown past Europe? We focused so much on Europe in the first half of this year. Have they done enough now that it would take something catastrophic in order to affect grain markets?
As far as Europe goes?
As far as Europe goes, if we would see a major collapse of some sort, and that doesn't look like it's going to happen.
Right now the weather has seemingly pushed all of the news out of Europe to the side. Every once in a while it'll flare up again. We'll see it move we'll see the US dollar index move in relation to that. But the grains have broken this contact with the US dollar, and so yes, they've basically broken contact with concerns out of Europe. I think it's going to take a while before the grain markets settled back down to the point where Europe becomes the main driver of direction again. You know, this winter and certainly this past spring that was the case. Just there's so many other things to focus on right now that are really affecting the supply and demand of our grains that those take precedence at this point.
If you're a farmer, you still have some old crop corn and beans. At what point do you say maybe I'm being a little too greedy here?
You know, it's going to be a very difficult market because we get to these high price levels, and like what we've seen over the last couple of days, we can rally to new highs and then follow that up with 40, 50, 60 cent losses in the blink of an eye. So, you know, for those who are still holding, you just have to pick a point and sell. Should the markets go higher long term? Yes, because there is a concern about tight supplies. But again, that demand question, if demand shuts down, no one's going to be willing to push price. And so there's a fine line where we're going to hit that tipping point and things are going to change.